Yay! We're live. Hi, Alex. Welcome to Venture with Grace.
Thanks, Grace. I've been watching your show, so it's great to be here.
I'm crying. It was so fun to meet you at the Fellows Fund event, and I feel like, yeah, I really enjoyed your panel with the Corgi founder as well as like some other well-known founders and investors. And I want to start off with, what were some core lessons that you've learned early on from being an engineer at Boeing to joining venture capital to, eventually founding your own company? What would you say is like one piece of lesson that you've learned before funding?
Yeah, when I look at the different experiences I had, whether I was being an engineer or being a VC, there are certain skills that you can take from certain things. From engineering, I might have been very methodical, problem solving. From venture, you certainly learn sales as a junior VC. But I think at the end is learning how to work well with people, learning how to work well with the diversity of people. I mean, at Boeing is a very, you might call it a traditional industry, right?
Mhm.
And you learn how to work well in a large enterprise. And given what we do, selling B2B, that certainly does help. In venture capital, you get to work with with VCs, with LPs, with founders, with execs across many different startups. So you learn how to work well with all these different people as well. So I think if I were to boil it down to one thing is companies are made as a combination of individuals, and how well the individuals all work together ultimately makes or breaks the company. I think that would be my answer to that question.
Um, I love that. I wonder, maybe we could talk about like, I guess like, I think you mentioned about like you mentioned about this in a different podcast that like you were when you were doing accounting as a VC for one of the portfolio companies that you realize that there is like a lot of automation could be done. And maybe we could talk about the two-time YC experience to, founding the accounting company. The first company you have founded was like doing big data for finance and growth functions. And what did you learn from like the first experience that you kind of like took to the second experience or the opposite?
Yeah, so my first company is a company called Blue Light. We went through YC in winter 21, and you described it exactly right. We call it big data for finance and growth functions. More, I think generally you can put us in the FP&A bucket.
Mhm.
So when I was a junior VC, I would work very closely with a lot of the portfolio founders, and oftentimes working with them on their financial model, on the projections, making sure that the actuals tie out with the forecast.
Mhm.
Um, in that experience, I saw that there was a lot of automation, but just generally help that finance individuals needed. And so when I started Blue Light, it was to, okay, I want to build something better for the FP&A space, something better for startup or company to investor reporting.
Mhm.
I had a blast. I might have done one or two things right, but generally did 101 things wrong. But you
Mhm.
certainly learn a lot in that first time around building a company. I think from a tactical standpoint, one thing that I learned was building FP&A software is extremely hard because you're relying on the ERP data. You're relying on the data of the underlying accounting software, and how well that performs ultimately is the baseline for how quickly and how well you can then forecast.
Mhm.
So, left that company in May of 2022. Had a blast with my ex co-founders, learned a ton, and they're still running the company. They're moved into a different space now, and started Truewind because I still think that there's something really meaningful to be built in the office of the CFO, and decided, you know what, it makes sense to move further down the stack rather than up the stack in terms of where the software sits.
Mhm.
So now we're moving closer into the accounting space.
For sure. Maybe we start with the Truewind product. I don't know if you want to do a product demo.
We actually are preparing for a conference launch next week, so now wouldn't be the best time to do a demo.
Got it. Okay, so why don't we just look at just use like the current existing site as example. Like, maybe can you walk us through like the first version of the product to like how do you guys end up like here today? And I guess like what were like one piece of insight that you have generated like before um like building the company? So like the VCs always ask like, oh, what gave us one piece of insight that like make you like as your like unfair advantage? Like, what would you say was that for Truewind?
Yeah. When we first started, we were targeting a slightly different user persona. So our first customer were founders. Makes sense. This is a space that I know a lot of people in. I was able to get our earlier customers here. So we're going to target founders. With founders, they just kind of want the books to be taken care of. There's not a lot of complexity to it in the earlier stages. So the earliest version of it was click a button, connect a bank account. We click another button, connect your general ledger, and we use your historical GL to classify the bank and credit card transactions coming in. That was it. This was back in January of 2023. ChatGPT had just launched 2 months prior. So we were the first post ChatGPT YC batch. And at the time, I think it was maybe like 40-50% of the batch were AI companies. Now I think it's closer to like 90+%. But that's all it did, is just classified a few transactions. Very quickly, as we started working with larger companies and as we started working with more accountants, that product was far from sufficient because that was on a purely cash basis. It became far more important to tackle accrual basis accounting. So our product has evolved tremendously since that to be able to tackle the automation workflows that a lot of accountants are looking for. In terms of the key insight that you're talking about, I learned, look, integrations is a very sexy word in the world of tech. We all want to integrate with everything to create this broader ecosystem. The hard thing in a world of accounting with integrations is everyone uses these operating systems slightly differently. Like Grace, if you and I both run a studio company and we both have a customer and we both use Stripe, but you send a subscription versus I send a one-time invoice every month, the data model behind the scenes is different. And so simply because we integrate with Stripe doesn't necessarily mean we get the data in the form that is representative of the company. And so learning that we do some integrations, but we try to limit the number of integrations because we don't think that that's the nut to crack. It's not an endless race of integrations to build.
For sure. I wonder, so like how you mentioned about like you kind of like work down stack of the previous company. So like I guess like can you talk about the accounting stack in general? Like what were people using? And then obviously like I mean as a non-accountant, I heard about like QuickBook a lot. And then also there is like, like the fund of Runway and Digits were on our show as well. Like, so I guess like where does everybody play in the ecosystem in your opinion? And like, why do you feel like it will be most, I guess, like, I wouldn't say revenue generating, but like, I guess like the value creation are coming from basically.
Yeah. Sichi at Runway, and I haven't met him, but heard phenomenal things. And Jeff at Digits is a friend. I think very highly of the company. So the way I would break down the space is first your core accounting software. That is, for larger companies, that would be called your ERP. For small businesses, you have QuickBooks and Xero, and the startup competitors would be companies like Digits and Puzzle. In the FP&A space, you have, Adaptive Insights, and a couple other large ones. And then for startups, you have Pigment coming out of Europe, Applicant in Europe, and you have Runway as well.
I have a question. So like, what does a neobank play? Because like the Brax and like Mercury or Rho, like I think everybody's like kind of positioning themselves as like there is like a software component that kind of like tell you where your employees are spending and all that kind of stuff. Like how does that kind of play into the picture?
I see that as further down the stack than even the ERP. So you have all your different banks. You have your neobanks like Rho, Brex, etc. You have your traditional banks like JP Morgan Chase and so on. Then you also have your payrolls, Rippling, Gusto, ADP. You have your payment system, Stripe, and then there's like hundreds of other payment systems out there as well. All of these different systems kind of run the day-to-day of your business. You need your bank to collect and send out cash. You need a payment system to collect money. You need payroll to pay people. And all of these are sources of truth in their own respective way to run the daily parts of the business. Once all that business is being done, you need to roll that up into a piece of accounting software. So this is where your bookkeeper and your accounting software go hand in hand to deliver the books at the end of the day. So in our case, we're developing what we like to call a digital accountant.
Mhm.
We are AI bookkeeping. We use AI to do the bookkeeping of these different operating systems, and then we roll it up into your core financial software.
Got it. Very cool. I wonder, so like so I guess like when you're thinking about like go to market, would you say at the beginning you mentioned you were like selling to founders? I would assume like YC is like a perfect place to sell to other founders because who doesn't need accounting? But how do you think about like the go to market right now? Because you guys have grown and like, founder is just one piece of the, I guess, like the pie in the current like case study. I saw on your website, you guys are selling to like multiple different type of audience from like nonprofit to family office to like these other, I guess, like different type of like profile of audience. How do you think about go to market in general?
We really listened to the market for this one. While we tried to plan ahead on go to market and like the executional steps, we do plan ahead, but oftentimes it's our customers that pull us, and so we started working with nonprofits because we got a lot of nonprofit inbound. We started working with family offices because of the same thing, and so what we've seen is nonprofits and family offices, for example, deal with a lot of messy, call it like revenue type data. For nonprofits is donations, for family offices is brokerage accounts, and being able to reconcile those numbers is a massive lift of work. And so because we got a lot of inbound from these customers, a lot of them are also on Sage Intacct. We built a native integration with Sage. We have native integrations built with QBO, Sage, Xero, and NetSuite, the four more popular general ledgers. And we last week, I think it was, we announced our that we're a marketplace partner on Sage. I think that was a long time coming. And so because of the market pull from these directions, we tweaked our product in a way to adapt to their core data sources without having to integrate with the long tail of it. Hopefully that gets at the heart of your question.
For sure. When I guess like when you are presenting the data to different type of audience, what do each type of like audience would care? So for example, a nonprofit or a family office or like a startup, they may care about like different things. And how do you think about like what does each segment of people care about from
Yeah.
a standpoint?
When I think about founders, I think they want peace of mind. They just want to know that the job is being done.
Mhm.
They know founders are busy running a lot of different things. They just want to know the job is being done and they want peace of mind. As a company grows up a little bit, eventually you hire somebody in, let's say, operations, a chief of staff, whatever you want to call it, and they probably take over the accounting part for the founder. At that point, they also just want peace of mind. That person is supposed to be the extended leverage of the founder. It's going to be a very busy role, doing fire drills all over the place. And so once again, you want to know that the accounting is being taken care of. But at that point, you also want a little bit more support. Let's say the founder or someone asks a question. They're going to need someone to be able to provide sufficient support in answering that as well. Once you start working with accountants, the nature does change a little bit. They want extreme accuracy as well as transparency. They don't want the AI to be a black box. They want to know exactly how the answer got there, why it is that way, and if they disagree with it, they want to be able to change it. And so the product does need to evolve a little bit, where now that we work a lot with accountants, that the accountant is our user, how do we provide that level of transparency that they need in the data, in the product, to feel comfortable with the books that they're closing?
For sure. I wonder, maybe we could talk about like the go-to-market landscape. So like how do you guys kind of like find out about the like how do you onboard your first customer versus like how do you kind of like onboard a customer today?
The onboarding process actually hasn't changed all that much. We've
By
been
onboard, I mean like I guess like acquiring the clients
gotcha.
or the go-to-market strategies.
Yeah, I think that's evolved quite a bit. I mean, earliest days, I don't think it gets talked about enough, but with our earliest startup customers, it was me texting people that I knew, asking friends that I knew if they had friends that they knew, right? My when we got into YC, the first piece of advice was call anyone you know. Like now is the time to call in favors, to call in help, to call whoever it is that you can to get the early traction to help you grow. Because then work within the YC community, you can use that as leverage to continue growing. So then once we went through YC, then it was okay, let's use Bookface, let's use Launch YC and all the avenues of launching there. But nowadays, with accountants, it's a lot more in person. A lot more in person. We go to conferences and trade shows. We host small private events in different cities. My team and I are planning out the cadence for all of 2026, which cities that we want to hit. We like to do smaller type events, 8 to 10 people, whether it's a happy hour or a lunch, breakfast, or a small dinner, just because people like to chat with each other and get to know each other. I find working with accountants, that's the cadence that they enjoy. So go-to-market now is a lot more offline conferences and in-person events.
For sure. When you're thinking about these events, like how do you calculate the conversion rate? Is that like everybody who is at the event will convert, or would you say it's like more of like a word of mouth action? So like they became their evangelists for their city.
That's an interesting question. I'd say more the former. We're still trying to figure out the latter. Usually the people that come to our events, we've had a couple touch points with them already. Some of them probably are customers already. It's the ones who are already a customer or they're leaning in and we want to continue tightening the relationship that yes, we're going to invest the time to come to your city, meet with you for a meal, get to know each other so you can hear our philosophy towards AI. We can share what we're seeing on the market and we love to hear from you as well. I'm sure there is a time, I hope, where it'll be more the former of everyone comes here, becomes an evangelist. But I guess at the end of the day, if we're inviting accountants, you're only going to be an evangelist if you're using our software, right? So
I guess like how like I guess like how did you find the 10 people to invite for your in-city GTM strategy? So are they just like the bigger, like let's say like let's call it like the big accounting firms partners, or how do you select the people that like you know that they will convert? Is that like maybe call it like people like companies with like 50 people, or a company with like 100 people? Like how do you kind of like benchmarking these type of people?
yeah, I think this comes down to being very, very tight in your ICP. Usually I wouldn't be this specific, but I think we might as well. With an accounting firm, we like working with teams of we work with some teams where there's just one person where they're so busy and they just need some additional support. But our bread and butter sweet spot is at least 5 people on the team. For mid-market companies, you like to look at companies with 10 to 100 million in annual revenue. They typically have at least, let's say, 3 accountants on the low end, but we prefer 5 to 10 accountants on the team. And so once you kind of have that cluster of 5 individuals, there's a lot more coordination work that needs to happen. And that's where AI agents can help relieve a lot of the manual day-to-day work that needs to be done. And so that's how we think about ICP. But in terms of like where to host these events and how to find them, that's actually not too difficult. I mean, there's enough sales and marketing tools out there with different leads lists. With a little bit of research from our sales team, then we can see, okay, these are 10 accountants that we've been talking to, and they're all around the Austin area, or they're all around the Boston area. We end up spending a lot of time on the road going to central time zones and Eastern time zones. There's a lot of accountants there. But also, given that we're in the Bay, we want to go to Seattle, Portland, Sacramento, San Jose, San Diego, Los Angeles, right?
Wow.
All these metropolitan cities. They always have a cluster of accountants to meet with.
Got it. Wow. I feel like that's a roadshow in general. Do you feel like when you go to like the bigger, by the way, hi LinkedIn user, he said he met you at an event SF. You're the real deal, sharp, humble, wish you success. I wonder, so like when you are going to these like larger events, like do you feel like you actually would close client at, for example, having like a booth at a trade show?
The answer is yes. So this is the cool thing that we learned about our industry. Accountants do travel to trade shows to learn about the newest trends to look for software vendors to evaluate and buy software.
Mhm.
There was one case where we closed the deal with a customer on the spot. Uh,
Mhm.
like we met on day one, and by day three, they signed with us. So these trade shows have been really phenomenal for us as a go-to-market because this is where accountants go to purchase software. I've heard mixed things about some of the perhaps like tech trade shows
Mhm.
where it may not be the best avenue, but fortunately for us, it's a very, very strong avenue, and it's one that we continue to invest in. The challenging thing is there are a lot of different trade shows to go to, and not all trade shows are made equal. So the hard thing is making sure you find the right ones
Mhm.
and doubling down on those.
Do you think like so for your strategy, like would you say so for for a lot of like the SaaS go-to-market strategy is like I land three big logo and then even they're just paying very small amount of money, but you can use a bigger logo to get like other customers like the SMBs and stuff like that. So like do you feel like that works for something like accounting? Because I think the challenge would be, let's say you land Amazon and like the SMB may not think they are Amazon, right? Like they don't have the budget and like yada yada yada. And how do you think about the mentality or like the psychology behind the people that you're selling to for that content? And then like when they're looking for the AI solution, okay, I have two questions. I'm sorry. I'm very infamous for like saying these like 4,000 questions in a row kind of vibe stuff, but one part I'm curious about is like the technology piece. So nowadays like people have ChatGPT and all these kind of, obviously ChatGPT hallucinate a lot, but if you're doing um certain type of simple stuff, there's a lot of like existing cheap slash free AI slash Microsoft Copilot or something can do part of the job, right? And then versus like AI native products. So I know that you guys started as non AI native product, but obviously everybody uses AI these days. But how do you think about the technology component to make your software special? And then the other piece is like yeah, like I mentioned about like the psychology behind selling to these like CFO of accounting firms or like just accountants in general.
The way I would answer the psychology of selling to CFOs and controllers, I think the office of the CFO is the only office outside the CEO that deeply understands risk management and how to think about the word risk. It's a
Mhm.
very loaded word. It means a lot of different things and it's very complex in the world of business. When it comes to buying software, it's not exactly number one on the CFO's mandate,
Mhm.
right? Like they buy very few pieces of software. You got to buy the ERP because it's mission critical. You might get an FP&A solution because that's also the strategic part of your role.
Mhm.
And they like to buy a few things and make sure it works end to end. And so that's one of the challenging things about selling to the office of the CFO. The positive thing is once you get in there, you're there for a very long time. Assuming that your products are robust, it does what it's supposed to do. It's very sticky, it has very strong retention. And so, given the nature that the CFO understands risk, what's the best way to de-risk your software? Make sure someone else uses it, and ask them what they use. And so, the story I like to tell is: you get a group of CFOs or controllers to sit down together over dinner, and one person starts to talk about a piece of software that they're using. You're going to see all these CFOs taking notes. You see them taking notes of why they like the software, what's good about it, and so they're going to go home and be able to look up that company, do more research on it. But because it started from a very positive reference, so that's how I think about the psychology of it. Yes, social proof matters a lot. The right kind of customers do matter a lot. They want to see that they're not going to necessarily be the guinea pig, that you're working with other people as well. That was your second or first slash third question. What was the question in the middle again?
Oh, sorry. It was the technology piece. So like the technology moat versus like the current existing solution that's like kind of um
Gotcha.
like ChatGPT or Copilot and stuff like that.
Yeah. In this case, what we've seen is ChatGPT is very good at drafting, is very good at being this thought partner. And with accountants, there are use cases. One is, again, drafting emails is a
Mhm.
very common one. If you're an accounting firm owner, writing evaluation reports,
Mhm.
um, Another interesting one that works well for accountants is drafting standard operating procedures. So every accounting team has SOPs, standard operating procedures, that outline these are the steps you need to follow to complete a task. And this is very necessary because you end up having these very sophisticated Excel spreadsheets that if you or I open it up, it will take us hours to days. It'll take you days to try to figure out, if at all, how this sequence works. And the accountant needs to design this so that they hire a new junior accountant. They can come in, read the SOP, and just follow the steps and execute the steps within the Excel spreadsheet. Okay, so it turns out ChatGPT is pretty good at writing out those SOPs as well. But what ChatGPT isn't as good at is executing the reconciliation work that accountants have to do. Let's say you run an Airbnb business. And you have 10 Airbnb properties, and you generate a report from Airbnb, blah, blah, blah. Okay, you have all this in Airbnb. And then you need to reconcile the report from Airbnb with the money that arrived in your bank account. That is not a process that is easily done, even by humans. And it's certainly not something that can easily be done using these off-the-shelf tools. This becomes a very accounting-centric task that need to be done. So it's the blend between understanding the different operating systems that they use, understanding accounting, but also understanding database schemas. And the combination of those three makes it very complex for off-the-shelf tools. We designed this in a way to tackle this problem head on. And that's why accountants use our product.
Got it. I wonder, what would you say is like the 3 core features that you feel like dominate your own product that like people actually love versus like, these other upcoming software that is kind of like very similar to what you guys are doing?
So I'd say I'll boil it down to 2 things. One is reconciliation and the other is review. Actually, maybe the third one I would add in is being general ledger agnostic. Okay, so to cover those 3, the first one, we call it our reconciliation agent. This is an agent that reconciles unstructured third-party data. So whether you use, everyone in our world knows Stripe, but you may not have heard of authorize.net and all the long tail of payment solutions that are out there. We help reconcile the numbers that are the deposits posted in your bank account with the numbers in those reports. That is a very long and arduous task that accountants have to do. So that's our, kind of our crown jewel feature. That's why accountants love working with us, because we make that reconciliation job 10 times easier. That's the first one. The second one is the book review agent, where you review your general ledger for accuracy and the flux analysis. The reason this is a big deal is accountants would spend hours reviewing the book. So like a junior accountant does the work, then a senior accountant needs to go review the work. So they have to download the general ledger. There's thousands of line items, tens of pages. By the time you reach page 30 out of 60, your eyes are getting tired, you're starting to gloss over it, you're going to start making mistakes in the review process. We use AI to do an initial pass of the review. Instead of having to review 60 pages, you might have to review only half a page of strange transactions that the AI has flagged. That's the second one, our book review agent. And the third one, I would say, is being general ledger agnostic. There are a lot of new GL solutions, Digits and Puzzle going up against QBO. We have Campfire, Rillet, Dual Entry, and others going up against NetSuite. And I think that's all great. We choose not to play in that fight. It's a very challenging one. I tip my hat off, I salute them, and I love all of them to death. But we chose to play GL agnostic. And the reason why I think this is really important is for accountants and for controllers and CFOs, we say, Truewind is your fastest way to adopting AI. There's a lot of risk and headaches in replacing your GL. So instead of replacing it, work with Truewind to address your most painful workflows using AI rather than doing an entire ERP overhaul.
What is general ledger? Like, what does that entail? Like, I'm sorry, I'm thinking crypto because when you say ledger, I was thinking about the USB basically.
General ledger is the storage of financial transactions. So anytime a financial transaction happens, it gets stored in what's called the general ledger. I go out and I buy a coffee.
Mhm.
when I meet with somebody we're trying to recruit. Money just left our account, and
Mhm.
so we need to incur an expense. That information is stored in a general ledger. A customer signs a contract with us or pays us for a contract that is signed, there's a financial transaction that occurs. That information is stored in the general ledger. The general ledger is the summary of all the business transactions that a company has undergone. You know that term in investigative accounting when they say follow the money, right? If you just follow the money, you'll find out where the crook is and what went wrong.
Mhm.
The general ledger is the data points of following the money.
Mhm. I'm very tempted to ask you like a very side question, which is like, what's your thought on like stablecoin or like this like blockchain situation in accounting?
I don't have much of an opinion on that.
Yeah, I feel like stable coins like making a comeback. Like I feel like crypto episode was always our like most listened episodes. But I wonder, okay, so we chatted about the product, the technology, and then now I wanted to chat about like strategy in general. So like I know that you started with like you mentioned about like the three things that's core. I think the number three is like something I consider as a strategy. You mentioned about like you don't want to go against like, NetSuite or all these kind of other top like bigger companies like accounting suite. Um, what which is like you guys are like general ledger agnostic, but what are some other strategic decision that you made that you feel like set you guys apart from a lot of the competitions?
Yeah, that's a really neat question. The first one is being general ledger agnostic.
Mhm.
The second one is the choice of our ICP, like our sorry, the user persona, who it is that we focused on. It was a strategic decision to start off focused on the founder, and it was a strategic decision to understand that to grow a very large business in our space, selling to accountants makes a lot of sense. The
Mhm.
companies are larger, accounting is more sophisticated, more complex, and we're
Mhm.
able to capture higher ACV value that way. So the first is the GL, the second is the exact user persona that we sell to. The third one that I would say is around the verticals. It's very popular within the world of software to sell to other software companies. It
Mhm.
makes a lot of sense actually because they're more willing to take risks.
Mhm.
They're developing new technology themselves, and so they are more willing buyers of new technology. For us, we've been working also admittedly with a lot of technology companies, but a large focus of ours has been on nonprofits, on family offices, on real estate. You might call them traditional industries, but at the end of the day, very underserved. The complexity of the problem is just as high, if not more complex. And so, working in these areas have been far less competition. Our challenges are different, right? Like if you sell to technology companies, they're more willing to buy, and there's perhaps more competition. For us,
Mhm.
perhaps less competition, but we need to do more in terms of educating the market as to why now is the right time, why this is a very safe and effective investment for them to make.
um I guess like another piece I'm curious about, like when you were first entering the real estate and family office or all these kind of like traditional businesses, how do you define success? By that I mean like, obviously you sell to one, that's great. But like what about the retention as well as like you mentioned about the ACV is a lot higher when you're selling to bigger companies like but I feel like traditional companies problem is like they never grow, right? Like it's not like they never grow, but like they are not as growing as fast as like the enterprise. I think a lot of people targeting enterprise, let's say, the customer service company are like targeting, your startup, but like, 2 months later you become series B. So like not 2 months, but like a year or something later, you started hiring like crazy. So your accountant is probably more yada, yada, yada. So, like, I think the challenge of like the traditional industry is like, number one, is like, I guess they never grow. And like, how do you kind of like grow your revenue from there unless you are? And then number two is like, um, the sales cycle is that even longer. You mentioned about like trade show, like there's a guy closed in like 2 days or something, but um, what is like the like normal um days on like how fast they're gonna kind of like close the business basically?
Yeah, and I think that is one of the challenges that we always have our eye on. Our deal cycles have been our shortest deal cycle was same day. We had a call in the morning and then they signed that evening. But more standard for us, I would say, is a 2 to 3 month sales cycle. There is a little bit of educating. There might be like a mini 1 week POC in there to showcase the product and what it is that we can do. And a lot of the focus has been around, once again, educating the market so that when they come talk to us and we begin that sales cycle, things are already tighter. And we have a lot of things off the shelf that we can show them so that by the time they're ready to make a decision, they've seen everything, they've learned about it in advance. That is one of the exciting things that we're seeing more and more in the market these days. I think more now, more so than ever, we are dealing with a more educated buyer persona. In the past, there was a lot more educating that needs to be done, but more so than ever now, people do their own research, their own education, they do their own kind of competitive landscape. It's a very common question that we get is, well, what about XYZ companies? What do you think about them? They're trying to always make sure they get the comparison right so they pick the right ones. Those are usually very positive calls. It means that they're leaning in. It means that they're getting close to a buying decision. And so I think our part in all of that is continuing to help educate. One way we really like to educate is by hosting like little mini series or webinars where we teach them how to use AI. We're like, hey, if you like to use ChatGPT a lot, here are other things that you can do on ChatGPT. You probably haven't heard of certain off-the-shelf tools like NAN. Hey, we're going to show you how to do a little simple thing on NAN. Great. Now join our third session and just see how you can use Truewind. This is how we're going to teach you how to use Truewind before you even bought it, just to get you excited about what it would be like in this journey with us. These are ways that we can help educate the buyer and shorten that sales cycle. Ultimately, it comes down to seeing it, letting them play with it, and that tighten things up a lot.
For sure. I guess like what does accountant typically do? Like with, before Truewind and then like you mentioned about like, the chat GPT hacks and then N8 and hacks and then like you kind of like slowly introducing them to your own software. I guess like what is the general accounting's like workflow kind of look like? So is that they just log into Truewind and then see like, all the accounting has been done for them and then they just have to prove it, or like what does the future of like accounting kind of look like?
So one thing to clarify is it depends on what kind of accountant. The word accountant or the title accountant means a lot of different things.
Mhm.
And if you meet with a bigger team, you're gonna have someone who's an AP specialist, so they deal with accounts payable. There's an AR specialist, they deal with accounts receivables. There's going to be perhaps someone in treasury, and then there's going to be, perhaps a larger team dealing with the journal ledger, the journal entries, the month-end close. This is the team that we're targeting. And so the first thing that they do is seeing, okay, my general, let's say my fixed assets number in my journal ledger is different from my fixed assets number in my subledger, which is my Excel spreadsheet. That is the subledger that we're digitizing. Why are those two things different? The accountant starts digging into it and needing to reconcile those two numbers. That is probably the most painful part of any accountant's job, is doing the reconciliation. This is where we then step in using AI agents to tackle that reconciliation. So the end state that you described is exactly right. We want that experience to be, you open up Truewind, the agent has done, let's say 50, 60% of the work.
Mhm.
You're going to have to do a little bit of prompting to help it get to 80% of the work. But what we've seen is that last 10 to 20%, you're going to still need to dig into it yourselves. The agents are pretty cool, very impressive, and very smart, but they're not as smart as the judgment that an accountant can make. An accountant that looks at all the data all the time, we're going to need them to step in and do that last 10 to 20%. But we did 80 to 90%, which is far better than having to start from zero. So that's the user experience that we look to provide to our customers.
Mhm. I want to ask a selfish question. So like, is there any like, I guess like solo founder accounting tool that like you recommend? So like if you are doing your own books, but not your own books, but like I guess like your own like logging or like ledgering yourself. Is there any cool accounting software that you recommend? Obviously,
Yeah,
I or if Truewind has like a 1% packet.
Well, the one that I've seen that tailors more to this is probably
Mm,
Kick.co. They raised from General Catalyst, I believe. I think it was something like a 9 million Series A. They were targeting solopreneurs, I think is the term.
got it.
Very small businesses. So I think that's kind of the fast-paced accounting software that is targeting that segment.
Wow. Okay. Amazing. Um, I wonder, so like, since you mentioned about like, I think on the other podcast, you kind of like talk about the accounting career a little bit, like not as you as an accountant, but it's more towards like the accounting career track in general. Like you mentioned, like, I guess there's like the earlier stage level of accountant that they were doing a lot of these like manual logging works and stuff like that. So like now it's replaced by AI. Like, I guess, um, what would be like a useful skill in the accounting industry, and for the accounting kind of like career track, like it's kind of like, I mean, I'm just thinking for like software engineer, you have like the junior people and then the mid tier slash like more seasoned people. So like I guess in that version of accounting, like what does a junior people do and what does like the senior people do, since like you mentioned like right now it's 60-70% of the work can be done by AI, and then what does the last mile of like 30-40% of prompting even look like? How can people kind of be just better at that skill
When I,
without doing the manual stuff?
when I think about the career tracks, I chuckle because in the world of software, a staff engineer is a very senior level role, right?
Mhm, mhm,
In accounting, a staff accountant is the most junior level role.
mhm,
So when I think early on, when I started talking about titles, I mentioned it perhaps once. Okay, a staff accountant is a junior level role, move on to the next thing. But we all know that everyone's saying many things throughout the day. You may not catch everything. And later on, someone got confused and said, wait, I thought the staff accountant is very senior. No, no, no. Staff accountant is the most junior level role. So with accountants, we see it go from like the junior accounting ranks where your job is to do the various tasks, like make sure you send the bills, send the invoices, collect the money, enter the journal entries into the ledgers. That's the staff junior level roles. As
mhm,
you begin to progress in your career, become a senior accountant or an accounting manager, your role becomes more reviewing. You're doing the more complex accounting work, but you're starting to do a lot more review. You're reviewing the junior level work. And then when you become a senior, the title here would be the controller. They're reviewing the senior accountant's work, they're reviewing the accounting manager's work, but they're doing the more technical accounting. They're dealing with ASC 606, which is the revenue recognition policy, revenue recognition guidelines. How do we properly recognize revenue in accordance to GAAP standards, the generally accepted accounting principle standards? So that's how the work evolves as your accounting career progresses. To your last point, I think my answer would be, look, with every new wave of technology, the way that we work changes. And in the world of accounting, I think it's certainly very applicable. The way we do accounting changes, but the accounting itself doesn't actually change. Like the term double entry bookkeeping, it has been around for centuries, and that has not changed and it will not change anytime soon. The accounting works as it's supposed to, and it tells you a clear picture to the financial health of the company. But wind back the clock hundreds of years, we used to probably carve our accounting into limestone. And then parchment came along, and we got to write the accounting on pieces of paper. And eventually, we had databases and computers so we could type the accounting in numbers on a keyboard, or first a typewriter, and then now a keyboard with the delete and undo function. And I think in the future, natural language is going to be a part of how you do accounting, because accounting is actually very context dense.
mhm,
It's context dense. What do I mean by that? Grace, let's say for your business, you go down the street and you buy a cup. Okay.
mhm,
You buy a cup, it's going to be classified as office expense. But if I run your neighborhood blue bottle and I go down the street and buy the same cup, it's classified as something else because I run a coffee shop and you
mhm,
run a podcast small business, two very different businesses. See,
mhm.
accounting is actually very context rich, context dense, and that's where natural language actually does make a lot of sense.
Wow. I wonder, so like I guess like when um an accounting software that kind of like automatically categorize your stuff, and then beyond that, like what are some stuff that happens afterwards? So that's why I was like, oh, can you give us a demo? Like, because I think like as a regular person, I have like manually add stuff on QuickBooks before. It's just like me checking is the natural language categorization correct, and I have like used like I guess like different tools to like kind of like just like track that, but I don't really know what goes after that. So like for accounting, I know that my accountant use their accounting software to categorize. I guess I'm making it more like put together for the tax report or whatever, but like I don't really know what happens on that software. So like what would you say after like the categorization? What is the next stuff? You mentioned about like, checking the stuff and, I guess like uh verification and stuff like that. But like what does that entail from like the software perspective?
So, Aurora, to try to tell a clear story, if you're a solopreneur and you have one bank account, one credit card, perhaps, right? You collect money through this a common stream.
Mhm.
The money arrives in your bank account. You classify the different transactions accordingly, and you're probably generally done. You might
Mhm.
need to double check that every single transaction you classified didn't get missed. That's
Mhm.
when you do what's called a bank reconciliation. You double check the bank account balance to what's in your ledger and make sure those two numbers are the same, and then you're done. But imagine multiplying that by complexity by 100 times. Now you're great. You're going to add in 10 Airbnb properties. Oh,
Mhm.
now you're going to start selling merchandise on Amazon or Shopify. You have Airbnb properties because you're hosting events, perhaps.
Mhm.
Um, Imagine, and now you have a team of 5 people, some in Europe, some in the US, and then some in Asia. So that means you have to run payroll using, let's say in the US you use Gusto or Rippling, but then overseas you use Deal. Suddenly there's a lot more complexity in there, and suddenly classifying things is not sufficient. It's a part of it. But
Mhm.
after you do the classification, you have to do the reconciliation. That is what accountants are paid for. They're paid to make sure that the numbers reconcile, the numbers balance. That is the most painful part of it. The classification part is not the hard part of it. It's just a part that has to be done.
Mhm. I wonder since you have I guess like in your company, since I feel like we just chat about like, recruiting people overseas, not overseas, like not recruit, sorry, like landing clients in like the mid, like basically the middle of like America because of it is traditional businesses are you guys main target. How do you think about hiring in general? So I know that you guys have like I think I would say most of the people, not most of the people, but I guess like according to LinkedIn, you guys hire you guys have like the most amount of people is in the engineering department, and then maybe a little bit in like BD and accounting, marketing, PM. Um, when you're thinking about ensemble your own business in the AI native world, what are some stuff that you are using AI for? And then what are some stuff that you're like, we have to hire this person?
Very neat question. Yeah, we try to be as AI. I mean, having been founded right around the dawn of ChatGPT, the first thing that any employee gets when they join is a premium subscription to generally any AI tool that you want. And
Mhm.
that stack, of course, continues to grow. The sales and marketing team has their own stack. The engineering team has their own stack. But it's a pretty neat question in terms of deciding when we need to hire versus when we need to use AI tools. I think ultimately the hiring follows the demand from the customer.
Mhm.
As we continue to get increased demand from new customers, from existing customers, well, first thought is, can we meet that demand with the team that we have? With all the tools, the team and the tools is fixed, right? We have this team, we have all the tools that they could possibly want to use. This is the demand that we can hit. Now we're adding on a few more customers. Great, we can go tackle that demand with that same team. But if we're suddenly adding on, you know, 10 to 20 more customers all at the same time, of a very large contract value, then I'm going to look at it and think, yeah, with the current team and tools that we have, we can't meet all those demands fast enough. We need to hire just a few people, and then we can start scaling up some of the things that we haven't scaled up yet, so that the next time when it happens again, hopefully next month, we'll be ready for it. So I think there's a bit of, there's some natural amount of tech debt that we incur just to make sure that we're not overbuilding. And then when the customer demand meets the team that we have or exceeds it, then we start looking into hiring incrementally.
Mm,
Comes down to a mathematical formula of some sort.
for sure. When I guess like when you're thinking about, I guess from the future of like AI perspective, like what are something that you are interested in implementing? I feel like everybody's talking about like having AI agents to do some sort of stuff. So basically like launching an AI agent function, or like where do you feel like the future of like Truewind is gonna go? Like how do you envision like people using Truewind a year from now?
For Truewind and the world of accounting specifically, agents is the key strategic focus. And the reason is because there is a lot of back and forth and problem solving that needs to happen, from the source data to the historical data to the tasks that needs to be done. And so you need to be able to reconcile various different points. And
Mhm.
that's where agents are exceptionally good at. So our biggest investment is on the agentic front. How do we develop better agents to be able to tackle brokerages for family office, to donation collections for nonprofits, to the various e-commerce platforms for any e-commerce company, right? That's our focus, is how to use agents better. I know there's a lot of focus or a lot of attention around voice agents
Mhm.
these days. We haven't done as much there. Not sure how, we haven't got enough pull from the market that this would be the right direction, but it's pretty exciting to see all the work being done around voice agents by the companies these days.
For sure. When I guess like from voice perspective, you feel like voice is not good for accounting agents, or
Not sure. We haven't made a decision on that. We have one team member who's very bullish on it, and we listen very carefully to his arguments, but we haven't pulled the trigger on anything like that yet. Could be neat. We'll see. We're still looking into it.
I'm just so curious about like how does that content even use voice? Like because there's so much numbers. Like, are you gonna listen to
Right.
this during this hour to like, hey, like I hear there's like a bug from like this transaction to that transaction. But you never know, honestly. But from fundraising perspective, like I wonder, how do you think about fundraising coming second time around from being a second time YC founder? What would you say are stuff that like you guys recently not I don't know if it's recent, but like you guys raised like 13 million Series A co-led by Rho Capital and Thomson Reuters Ventures. And thinking about like fundraising, how do you, I guess, like what were some stuff that you kind of like feel like you've learned throughout the fundraising process?
Picking the right partner, and it never gets easier. It certainly never gets easier. Even though this is my second time starting a company, it's extremely hard and it's humbling every single time. But really, it boils down to working with the right investors and the right partners. Our seed round was led by Fin Capital, and I have tremendous respect for that entire team. I respect the way they conduct themselves, the decision making, how they support founders throughout the journey,
Mhm.
and I still think very, very highly of them. Our Series A founders, Rho Capital, Pathlight, and Thomson Reuters, have all been supportive in their own respective ways. With Pathlight, we work very closely on like the nitty gritty and how to think about go to market and positioning. Rho Capital has been a phenomenal board member, and Thomson Reuters being a corporate partner. So conducting, like curating a good group of people, really is what it comes down to. It all comes down to people, right?
Is Rho Capital related to Rho, the
No.
company? Oh, okay. Yeah, I was like, wait, because it's also kind of in accounting or like slash banking, right? Yeah. Okay. So, I guess like when you're fundraising, like how do you kind of like set up? I want to say create FOMO, but like uh, I think a lot of it was setting up a deadline. Like, how do you make sure that the investor can follow the deadline? Because I think like they don't have much of an incentive to closing the round. I feel like that's a lot of what a lot of founders are asking. It's like they want to close the round in a month, and they kind of gave the ultimatum, but like it's not necessarily like everybody follow. And how do you kind of like I want to say create FOMO, but like how do you kind of like make sure that you have a deadline for each round of fundraise.
So this is an awkward thing to say on a live podcast, but we're going until 10, right?
Oh yeah, we are. Yeah. Oh, so I'm so sorry. I didn't notice. I saw that they're on the left side, and then yeah, okay. So this will be the last question, and then I'll let you
Love it. So I think all the tribal advice around fundraising and creating, running a tight process, just like in sales, speed is what closes deals, and lag of time is where deals go to die, is all very, very true. The other thing to consider is when a fund wants to invest, they want to invest. They're going to run a tight timeline. They're going to run a tight process. And we've seen that in action. We've seen funds who were leaning in and they ask for meetings. They tell you what's happening. They tell you where they're at and what the next step is going to be, versus funds that aren't as eager. They let a few days go by and they wait for you to follow up, in which case, it's lagging a little bit. There isn't that same level of interest there. In our case, we went from first meeting to term sheet in something like 4 weeks or 5 weeks, which, we were not preempted. It was not a 1 week round, I've really heard. But I still think 4 to 5 weeks, I was very pleased with it. And it's because the firm ran a tight process themselves. They said, first meeting, this is what we're going to do. Then we're going to have a 3-hour meeting. This is what I need before that meeting. And then we're going to do diligence calls. And we're going to want to meet with you again. And I happened to be in New York at the time, so we met for breakfast in person. And so they laid out a very tight schedule of like, this is what's going to happen. And so we were able to prepare for it. So as much as it is on the founder to run a tight process, a lot of times it also, they're the investor is the buyer, right? They're buyers of the shares. So you need to find the right ones who want to lean into this.
For sure. I want to be mindful of the time. Sorry about that. I was only looking at the left timer. But thank you so much, Alex, for coming on the show today. It was such a masterclass for the accounting software universe.
Grace, it was a ton of fun. You run a great show, and thanks for having me on here.
Let me quickly